Eric Muathe, Muathe.com, with part 1 of the US market analysis for the weekend of April 30th and May 1st, 2016. Let's take a look at markets here with about 1.5 hours to go before the close. So the market here has a little bit of trading to go before the close of the week, but right now we are looking at the Dow and the Nasdaq, let's just say down about 1%. Let's go straight to the charts. So we begin by taking a look at the Nasdaq. The Nasdaq, which as of right now is down about 3% for the week, which is consistent with what happens when the RSI moves below 50, which is we get a big reaction to the downside. So that's no surprise of the magnitude of the drop there. Keep in mind that this comes at the back of our previous analysis where we would observe that the Nasdaq had come back to test the top side of its weekly RSI resistance line. As you can see here that this line has been hit twice over the last couple of weeks and the market is being rejected at these levels. And also we can see that it comes back to test the previous break line, which we have been talking about, which is this line here. Why this line? Because this trend line break brought the market off the highs there on a weekly basis. We haven't been back to those levels, so we draw a line. So this was the break point there. We draw a line from that break, and you can see that since the break the market has struggled to hold above the line. As you can see here, double top rejection, which gave us the highs here and here, and then again over the last couple of weeks we've hit that twice. So net the Nasdaq here does seem to show that it is still poised to trend lower until it can clear those two lines, and of course the other line is the top side resistance. So for now, until we can clear and move above these two lines, the market remains very suspect. If you go back to the last couple of weeks, we've been talking about the market here, which was making a higher high. We observed that that came with a lower RSI level. That negative divergence could be one of the reasons why the market is pulling back here. So until now in this video, we've been kind of a little bit on the bearish side. I want to show you some levels here that the market could actually end up responding to in terms of support, and it is on the daily chart. For the Nasdaq, it goes back to this break, this RSI break began this nice move off the lows here. So that's that entry level, and the market hasn't looked back. All we can do here is draw a line off that perfect entry on the RSI, and I think here we have to watch for potential support. So right here the market is coming back to test that sentiment. If it can hold with uniform activity around this line on a day-to-day basis, that might actually be good enough support. There's also another line which goes back to the positive divergence line that began the move. So you can see here the market's made lower lows in price. The RSI showed an improvement. Now that same line, if you extend it either to the right and to the left, it makes contact with the previous lows line here on the RSI. So it looks something like that. And what I'm getting at here is, again, this blue line could also give the market some type of support. So let me draw that a different way, which is just connecting the lows on the RSI. And you can see that without any type of adjustment, the market is coming back in the general area here to test that line, bouncing off that line and the previous line we drew, which is off the perfect entry, which is this line here. That right there, bouncing. If the market can show support on those two lines, then somewhere around here is where the market could find stability and maybe move higher. Otherwise, if the market does not find support on those levels, and let's say if we break through those, then that's when we are going to expect the market to really be on a serious pullback. Keep in mind, we're obviously coming back to test an upward sloping 50-day moving average. So, generally speaking, if the market can bounce around here and move back above the 50-day moving average, that would be positive for the market. Otherwise, if we cannot hold, and if the market stays below the 50-day moving average, then definitely that would be a negative. So we shall see. Just like the Nasdaq, if you take a look at the Dow, and this is a 3-year weekly chart. So 3 years weekly on the Dow, we'll see two similar lines to that of the Nasdaq that show resistance. We got topside resistance coming into play right now. We hit that, in fact, twice over the last couple of weeks, and the market is being rejected. And then again we go back off the trend line break that brought the market off the highs. So this break here on the Dow, this break corresponds with the market coming off this all-time weekly closing high. We draw a line from there, and again we can see that this past week the market is confirming resistance on those two lines. So until we can clear those two lines, even the Dow is showing that net the market looks like on a week-to-week basis it wants to pull back. On the daily chart for the Dow, just want to point out here is we are having a relatively big down day, about close to 1% down for the Dow, or 141 points. The reason I want to point this out is because the Dow is moving below 50 on its daily RSI, suggesting a net big down day into the close. Of course, we shall see. If we take a look at the Dow hourly, and here on the hourly I'm using RSI setting of 26. So 26 RSI settings for both the hourly and the 30-minute charts in this video. So just keep that in mind. The setting is 26 and not the default of 14. And here what we see is we had observed that the Dow on the hourly needed to break this line, which has been support. In fact, this line has been good at giving us lows over the last couple of weeks. Even here we had a slight low there, and even earlier this week we held on the line for the lows there, but now we've come back and we broke through that. So now it's open as to what the market wants to do. The trend line that was keeping the market trading higher during this nice phase has been broken, and so now there's a question as to what the market wants to do next. There's also here a level we need to watch, because coming off the lows here, so off the lows here, of course we know that the market has had a nice run and still trading higher. We can see that this is where the RSI did move out of this range. So this RSI movement there, we can draw a line which should be where the market finds support, if it is to find support. You can see that we've come close to that line once before and we held for the lows somewhere there. So if the market is to hold, it needs to coil itself back above the green line. Otherwise, for now, it's slightly below that. But this is an argument here that is probably a good argument for those who want the market to bounce. In fact, if you take a look at the 30-minute chart for the Dow, so now we're going to 30-minute chart for the Dow, RSI setting of 26. We can see that off the lows of February here, that the movement in the RSI began with a slight breakout. So this movement here in the RSI gives us a line we can use for future bounce areas, and the market has used this once before, actually a couple times. It held back above the green line for the lows there, double bottom support here for the lows there, double bottom support here again for those lows. We held here with another double bottom for the lows right there, and now we are trying to hold back above the green line. So on a 30-minute chart, this is where the market might find support, by moving back above this green line of support. Otherwise, if the market cannot move above that green line and stays below that, then that's when we are going to know that the market finally has been unable to bounce on the green line as it was doing over the last couple of weeks. So either we bounce on this green line and get nice supports as we've been doing the last couple of weeks, or maybe there's a change now where the market fails to hold above the green line and moves lower. Right now it looks okay. In fact, it looks like the market is holding close to that green line. So maybe there's a hope here that the market might actually stabilize and stop the recent slide as we are looking at Friday's drop. Again, here with about an hour, 50 minutes to go, this is how the market is trading, the market coming off the lows of the day. Of course, we shall see how we close. Take a look at the S&P 500, and here we are moving below 50 on its daily RSI, suggesting that there's a good likelihood here that the market closes at the lows, if not close to the lows of the day, because as you move below RSI 50, you tend to get a huge reaction to the downside, and this is exactly what's going on here. More than likely, generally speaking, the market tends to close at the lows of the day. Of course, we shall see. Keep in mind, the most recent move lower began as the market did record higher highs on the daily price there, but the RSIs did not make a major improvement. So that negative divergence could be the reason why the market is pulling back. Keep in mind that day to day, this is a level where the market could find support, and we did see that by taking a look at the daily chart for the Nasdaq. Here again, we see similar type action ever since we moved above this RSI level here. So we broke out in the RSI, which began this move. Market's been trading above that with a nice move higher. So right now what's happening is that we are coming back to test that level. All we have to do is draw a line from there, and if the market can eventually bounce back above the green line, that's gonna be good support. There's also another line coming off the lows and connecting to the lows here. Just extend it out like that. Okay, so that could also be support. Keep in mind that same line happens to be the negative divergence line. Here we made lower lows in price on a daily closing basis. The RSI showed an improvement. That positive divergence could be the technical reason why we had a nice move higher since then. All we have to do is extend the same line, and right now the market seems like it could be coming back to test that line. If it can bounce back above that line, that's good, and the other line coming from the previous breakout. So bouncing back above those two lines would be good for the market. At the same time, we have to watch here and be vigilant, because if we break through those two lines, then that is where we would expect the market to start seeing a major move lower. Take a look at the hourly for the S&P 500, and again we come back to that RSI entry, which was a perfect entry. Why? Because on hindsight, this movement on the RSI on hindsight began this nice recovery, right? And we are still trading above that, so we draw a line from there, and that's what I call the uniformity method, something like that. And you can see we've also bounced on this line previously before here, which was the lows there, lows of April. So anyway, what I'm trying to say here is that if the market is to recover in the here and now, it needs to be back above that green line. Otherwise, the more we stay below that line, the more the market stays below that line, the more this is suggesting that now we're in a different type of market that looks to pull back and not look to bounce. As we come to the conclusion of the month of April and go to a new month next week, we have to start considering the monthly charts. One thing I want to point out here is, as of right now, the market did make an attempt to break out this month but failed. So in the month of April, there was an attempt to break out on the S&P 500, and the market was trying to move above the previous and the current all-time monthly closing high, which for the S&P 500 was or is currently at 2,107.39. So this is a current all-time monthly closing high. The market made an attempt to stay above that but failed. So right now this is a failed breakout, and if we use that, that might suggest that with a failed breakout, that the market actually on a month-to-month basis could actually now be looking to go lower. Why? Because failed breakouts can be notorious for taking markets lower. Let's take a look also at the Dow, which had an attempt to break out this past month, and we see that the Dow, similar to the S&P 500 here, was trying to move above the previous and the current all-time monthly closing high for the Dow. The level there that the market was trying to move above was 18,132.70. So right now we can even say on a month-to-month basis that was a failed breakout, and that is a problem for the market net. If the market is truly going to be in a bull run, it needs to clear those monthly all-time closing highs. Right now, the last month we failed, so I think that here it suggests that month to month the market doesn't look too strong. And to conclude the video, simple analysis here is the weekly chart. Weekly charts right now don't look too hot, with the S&P 500 coming back to test the recent break off the highs. So coming back to test the recent break, so there was a break here in May of 2015 off that all-time weekly closing high. So the market here net on a weekly basis continues to be bearish in my opinion. In fact, if you take a look at that line, As long as we are struggling to hold above that line, and we've tried to move above that 3 times over the last 2-3 months and failed, as long as we are showing resistance on that red line on the weekly for the S&P 500 net, and especially after the market has had a fantastic run over the last couple of months here, nice recovery, especially now that we've had a nice recovery and we are showing resistance, my thinking here is that net, to summarize this video, more than likely on a week-to-week basis, maybe even as we begin the month on a month-to-month basis, I think the market is pointing down. We shall see. Enjoy your weekend. Eric Mwadhe.com. Be on the lookout for part 2, which is for subscribers, which is going to be ready sometime this weekend. Otherwise, good luck, peace, and blessings. Blessings. I am out. Mwah. See you guys.